Welcome everyone in a new video. This is the part 1 of our SMC full course, and in this video we will talk about the candlesticks. Like whenever you open the chart and you see that there are candles that are green in color and red in color, you can also customize the colors. But why this colors forms? Like when all the green candles are the price action moves to the upside and the red candles are the price action moves to the downside. Now almost every candle has the wicks on the both sides, even though these wicks may vary according to the candle. Like at this point on this candle, there is a wick to the upside, and on this candle there are wicks to the upside, but also on the downside, but they are minor on the downside. In the same way, there are almost the wicks in the both ways. Why these wicks form and why the candle bodies are formed? In this video, we will talk about that so that you can understand the price action better. Now, first of all, there are four things in a candle: open, low, high, and close. Like if now there are four things in a candle. Now we will take example of a bearish candle. Like at this point, this is a bearish candle. Now what bearish candle indicates? It indicates that the market moves to the downside. Now whenever market moves to the downside, then you can assume that or imagine that the price must have opened from the upside. So this area from where market opened is the opening price, because market moves to the upside. Now why you think that why are the wicks to the upside and downside of this candle? Because price opened at this point in a specific time. Like if you are seeing the 5-minute candle, then you are seeing it in a 5-minute, that in the range of 5 minute price opened at this point, moved to the upside, then it dropped to the downside and closed at this point within the 5 minute. In this way, this 5 minute candle forms, and the same is the process for the higher time frames like weekly, daily, monthly, or any time frame. Whenever price opens and drops to the downside in the specific time frame, that candle is the bearish candle, and the gap between the opening, which is at this point, and the closing, which is at this point, is your body of the candle, and the moves to the upside and downside of the opening and closing is the wicks. In the same way, market at this point opened at this point, traveled it to the upside, then again drop to the downside and close at this point within the 5 minute. If we take the example of a 5 minute candle, and the highs and lows are the areas where price traveled but didn't close at that point. Now the gap between the open and close is your body of the candle. Now there are also some examples that market may not always follow this process, because sometimes market may open, drop to the downside and consolidate at this point, then moves to the upside and then drop to the downside and again consolidates at this point, then finally close to the this point. There can be multiple scenarios, but the theory between these is that the opening and closing determine the body of the candle, but the price that has traveled above and below the opening and closing is the wicks. In this way, you can see that almost every candle has the wicks. Now we will see the examples. This is a 5 minute time frame. You can also break down this candle, but we can take the example of a 1 hour time frame so that you can understand this better. Now this is the current candle, this is the green candle. If we separate it at this point, now we can change the color. This is the black line. Now if we move to the 5 minute or 3 minute or even a 1 minute time frame, because we need a time frame lower than the 1 hour time frame, as you can see that this was the first candle of the 1 hour time frame, this red candle where we have dropped the line. Now this candle is the red candle. It means price must have opened from the upside, which is at this point, and you can mark this high and extend it to the right. So this is your opening price at this point. Now where candle closes at this point, because this is the bullish candle, so price must have closed to the upside. Now all the price action between these two candles is your body of the candle. If we mark it like at this point, this is the body of the candle, and As you know that the opening is to the downside, so this must be a green candle. Now if you move to the 1 hour time frame, you can see that this is the exact same body that we have marked as compared to the previous candle. Now how are the wicks formed? Again we move to the 1 minute time frame. At this point, now what is the highest and lowest at this point? In 1 hour time frame, this was the highest area where price has traveled, and this was the lowest area where price has traveled, because this is the lowest point in this hour of the price action, because market opens at this point, this high moves to the downside in a two candles, this was the low of the second candle, then market rallies up higher and turn from this point, turned down from this point. Now if we mark these lines, like at this point, this is the high down to the low, this is the low, and we can also make it a green color. Now this is the candle in the 1 hour time frame, this is a 1 hour time frame, and you can see that this is the exact candle that we have marked. In this way you can break down any candle. Now again if you move to the 1 minute time frame, you can see that how price action behaves at this point. This is the opening area. At this point market moves to the downside, then again moves to the upside, creates some pullbacks in between at this point, then it again moves to the upside, again created a pullbacks, finally moves to created the high and then drop to the downside and closes at this point. Now if we keep this aside, you can see that this was the price action in the 1 hour time frame, and as we have discussed, the opening which is at this point and the closing which is at this point and the high at this point and the low is at this point, these four things determine the what is the kind of the candle. But you do not need to see the green or red candles to see the price action. You can make all the candles colorless or even a black and still call which candle is green and which is red candle. Like we can remove all the drawings and then double tap on the candles and go to the symbols and make all the candles black. Like now this is all the black candles, and we can move to the higher time frames, even a daily time frame. Now as you can see that this was the current price action, this candle is the green candle, like we will mark this candle as a green candle, this is a green candle, and we can also separate it with the green line, and again this is again the green candle, and again at this point as you can see that this candle is again the green candle, and this candle is the red candle, this is also red candle, and this is again the green candle. In this way you can define this. Now if we change the colors, you can see that all the candles, this is body green, wicks green, borders. Now you can see that the candles we have marked are the green. In this way you can identify that which candles are green and which are red. You do not need any colors, but you can see that which in which area price action has moved. Now I got confused at this point because this was the every candle has the opening price at the same level at which the previous candle has the closing price, but at this point this was the gap up or gap down area, so you have to define that why it is the green candle and why it can be the red candle. At this point you can see that this was the opening and closing price of these two candles is the same, so this must be the green candle and this must be the black candle, or you can say the red candle. In this way you can define how the candles are formed and what is the price action and how these are formed. I hope you understand many things from this video, and in the next video we will learn that how the pullbacks are formed and how you can identify the real pullbacks. Thanks for watching this video.